All right, what's going on, everybody? Here today, I'm going to show you guys some different things that you guys can do and a free scanner that you guys can grab online. It is very limited to what you can do until you pay for it. And if you're going to think about paying for it, I want to start to talk about some different platforms that are actually worth paying for. And so, with that being said, though, I wanted to give you guys something that you could at least work with while you are learning. And even though this scanner is not as accurate as the one that I use, it's definitely a pretty decent scanner, and it does the job for the meantime, right? So basically, what I wanted to show you guys is this scanner. Now, I don't actually draw anything up on here, but I do use it to find scans. So this is called Formation Seeker. Now, you guys can Google that and just start an account. Again, I don't make any money if you do. But basically what I want to show you guys is that there is the charts, right? And you guys can pick Forex pairs and start to scan the markets this way. You can't really watch different time frames unless you pay for it. So, it's starts to, get expensive when you do this thing. But not any more expensive than what I trade with, but at the same time, the amount of value of what I get from my platforms is way higher than this. So I would just say stick to the free and use what is called their monitor. All right, so we can go and look at pairs that are being monitored, right? And we can find some pairs that have already kind of played out. Like Euro USD is a very good pair right now. They're saying this is the stop loss, and this is why I don't completely trade with harmonics. Is even though now things to know about this is that these triangles are made out of Fibonacci ratios, and they are like probably one of the most important things to know in the market. And what this harmonic does is it finds those Fibonacci ratios and finds the perfect point in the market where there's a reversal, right? So you guys can see it found this point. This was your entry. This was the stop loss. And it's using the 38 retracement on the Fibonacci levels. And I know this probably sounds like gibberish, but basically what this thing does is it finds the perfect point in the market for an entry. So what I do is I find ones that have already gone and hit take profit one or take profit two. And whereas most of the people that are using this website have already done their job, I'm here to tell you that you can get way more entries out of this than just this one. So we're on the hour chart on Euro USD. Now I'm going to move over to Trading View, and I'm going to go over to current time. And so here's current time here, and here's that harmonic pattern that we were looking at. So we're going to go over here, and where there's pitchforks, let's see if we can find harmonics here. Over here on the corner, X to A to B to C to D. So yeah, that's fine. And then we're going to go over here one more time and look at the market. So it came from this low up to this high. All right, so we're going to go back to here. And it came from this low, this high, this low. Now, again, here's your pattern, right? And we can start to zoom this in more if we wanted to, but this is the pattern. Okay. Let me just go and make sure that it was 1, 2, 3, 4. So let me just count that one more time. 1, 2, 3, 4. So it's actually right here, perfectly off this trend line. Now, this is a good area in the marketplace that we can start to look at on our trading view, right? Now, the second step to this is to grab what is called a pitchfork. Now, we want to grab a pitchfork, and we want to go from X to A, or actually, I'm sorry, from X to C, and then click down and hold it down until you get to the D leg. Now, we're just going to let that sit there, and we're going to get that perfect. What we're going to do is we're going to click this little plus button. We're going to draw a little square on here and zoom in, and we're going to get this thing right on the money. And now to even help you further, you get this little magnet, and it'll get it right on the money for you, like to the pip. It's important. Now we're going to just minus out, hit this plus button one more time. We're going to plus into the C, right? And actually, I think it is this one over here. Minus. And then we're just going to hit the plus button one more time. Go over here. We're going to grab this thing. Bring it back. All right, so now we are on the money. We want it to be right on the tips of these wicks. And then we'll just hit out one more time. Now, if you guys can start to see, this is going to start to give us more trades in the marketplace. Now, the most important thing to realize out of this is that just like these trend lines that we had drawn up previously over here, where you would get the market to break above and retest, that's the same exact thing that we're looking for. Like here was a fork. And you guys can see where we got this to, break and retest above, break, retest off this line. It continuously was like breaking and retesting, breaking and retesting, break, retest, sell, break, retest, sell. You know what I mean? All the time, it just consistently does this over and over and over again. And now, so there's some important things to know about this. When you grab your fork, it's not originally going to look like this. Now, if you click on the fork and then the settings, you guys will have these as well. And if you guys click these, you guys will notice that there's lines disappearing within the fork. And so you guys can put these lines in here. Now, there's some major lines. This line is a major line. This middle line is a major line. And then this line that this like dot is when you click on it, this is a major line. These are called external warning lines. And then these are called Fibonacci. So what you're doing actually is using Fibonacci ratios, which is the most important thing in the market. And then you're using common structure in the market as well. So, you get this, it broke, retested, touch this to the pip, zoom way in here. Broke, retested to the pip, and then it went up for the buy, tapped, came down, and it'll do this over and over again. Broke, retested to the pip, and then it broke down. Now, the important part of using this is so that when you use your buy and your sells, right? So let's go over here and just get a sell. Short position. Right here, we're going to put a short. We're going to zoom way in. Now our stop loss, guys. All right, let's just delete that real quick. Let's take the magnet off. That's probably why. The stop loss, yeah, breaks retest off this major line. Let's go down to like the 15-minute. And your stop loss can literally be a few pips. So 13 pips. Get that a little shorter. You know, maybe 7 pips. Now 7 pips, that's enough on $1,000 that I can put a 27-cent lot. And for every 7 pips that I gain, that means that I'm gaining, or for every, let's see, let's just move this down here and see what we got out of this. So even here, where the lines intersected from our last fork, just this alone is 52 pips. So if we only have a 6-pip stop loss and a 52-pip gain, that is massive, 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 massive. Now say we had $100, and say we even move this up to, you know, 10-pip stop loss, which is more beginner level. If we have a 10-pip stop loss, that means that every 10 pips we gain is 2%. So that means if we gain 2% times 5, that means this is a 10% return with a 2% risk, right? If we use a 0.01 lot size per $100, so a 10 pip stop loss, 0.01 lot size per that $100 like we were talking about. And that means that this trade is a solid trade. Now, say if we move this to 5 pips stop loss, that means that for every 5 pips is 2%. So that means every 5 pips for 50, that is a 20% return. So you can see that the smaller you get your stop loss, the higher your lot size will become, and the more money you guys will be able to make. So this is how you guys use forks and harmonics. And that's pretty important to realize and to know. And there's a secondary line that you guys can draw. And that would be, you know, I'll just put the tail end out here somewhere random. And we're going to go from X to A. Okay. X to A. Again, we want to make those perfect, but in a second. And then I'm going to put this bottom line to touch D. See how this bottom line is going across here and it touches with D? Now let's make this a different color. Let's make it like green. And let's make it, or let's make it blue. We don't have any blue in there. Okay, perfect. So here we are. We have some blue lines that are intersecting. And now you guys can start to see some more areas, and I'll get rid of this. You guys can start to see some more areas as well where this intersected, right? So you're like, oh crap, I missed this area. Then it broke it again and it gave you this second entry. So really, here's a way to get more entries out of your positions. And you just want to follow these rules in connecting the dots, really, right? And you guys will get some practice with this. But it's really important that you're able to connect the dots, right? And I'm actually going to leave this up for myself because that's a great setup. Like, I'm going to wait until this breaks maybe, one of these lines here, and then I'll start to get in for some positions where it's broken below. And, currently the market's just open. This is the gap between the weekend. But the market's just open, so I'll probably wait another day, and then I'll find some areas to get in. But I mean, you guys can even see where this stuff starts is pretty key. Some very key levels, and I'll show you guys an example of something that I was looking at on my own scanner. Now on this scanner, let me just pull up. Here it is. On this scanner, right? I was marking up this for the weekend. Now, this is everything from start to finish. We have our fork here that's going down this way. You can see the gray. And then the other fork with the tail end starting X, going to C to D, right? And so we got this market to break, and it came into this channel. And the weekend gap broke above the channel and closed on top of what's called a quarter level. And I'll go over those in a minute in the next video. But it broke above one of these quarter levels. It hung right on top. And I drew this earlier today. And then this happened tonight when the markets opened. And so this is pretty crazy because I was able to call this huge buy. And it's, ridiculous, because if you get in here with a small stop loss of like 5 or 10 pips, I mean, you're talking 77 pips. So 77 pips on the buy is quite a bit to be able to get into. And of course, this doesn't happen all the time, but that's the power of being able to use all this information at the same time, because I was able to come in here. This harmonic was already drawn for me. All I did was connected A to C to D, and this movement was already here. And so what I did is I found this little channel here, right? Some trend lines, basic trend line work. It broke above, retested on here like 5 or 6 times, and then it finally just shot up because it broke, it retested, and it went. Right? That's what markets do. They break, retest, and they go. And so that's really the power of being able to use all these tools. Now, this is a scanner that I have within a company, and I'll go over that. If you guys want to learn more, keep listening to these videos, and I'm going to start to show you guys some really cool things on this, as well as I have some more stuff for you guys, so please stay tuned, and I will see you on the next video.